everyone, thanks so much for tuning in. It's Leisa Erickson, Engel and Volker, St. Pete. Today our hot topic is interest rates and what is happening in the market. I've got a special guest with me today. Her name is Jane Floyd at NFM Lending. Okay, so welcome back. Jane, one of my favorite lenders in the world, Jane Floyd, does amazing things in the market and really has been in the business for such a long time. I know she looks incredibly young, but she's got a ton of knowledge that she can offer to us. And I wanted to invite you to come and talk to us about lending, because you hear interest rates have gone up, you hear interest rates have gone down, and really people don't know what that really in fact means. And I thought, who better to be able to express what is truly happening in the market than you? So Jane, what's happening? What has happened?
Well, thank you. And interest rates have gone up and interest rates have come down, Leisa. So on the 10-year, 10-year Treasury, if anybody pays any attention to that, and typically fixed rates follow the 10-year Treasury. So the 10-year Treasury in October was up around 3.25, and it is back down now to about 2.75. So that equates to interest rates right now on the 30-year fixed are running in the low to mid 4s.
That's good news.
Really good news.
Because back several months ago, maybe not even several months ago, they were like 5.
Absolutely, Leisa. Absolutely.
Okay, so interestingly enough, she's saying something that I find fascinating, because she's talking about Treasury notes. Why is it that we should care about Treasury note rates? Why is that influencing the market?
Well, it's the only thing that you really need to care about if you're looking at the interest rates. If you want to follow them, typically that's historically, I've been doing this 27 years, and for the 27 years. For the most part, that's where the fixed rates follow the 10-year Treasury. So that's where we're always looking, very interested. And at the end of the year, last year, everybody knew the Feds were expecting between 2 and 4 rate hikes this year. Now, maybe 1, Leisa.
Okay, that's good news. So 10-year Treasury note, if it's going down, it typically means that interest rates are going to go down.
Fixed rates are going down, correct.
Okay. If they're going back up, that means the rates are typically likely going to go back up, if I'm understanding you correctly. Mm-hmm. Okay. So, with that being said, let's talk about buying power. Mm-hmm. So, buying power, still inexpensive rates. Obviously, we're still trading at a pretty low cost of entry. In your tenure in 27 years, what's the highest interest rate you have seen?
And my interest rates when I first got in were at 12.5%.
12.5%. See, I can remember back in my early years when my parents were lending, and they were in that business, 18% interest rates.
Yep.
Crazy, right? So if you think about 12% interest versus what we now have at 4.5%, 5%,
Absolutely.
Super inexpensive. So let's net this out for people that are concerned about how does this impact my payment. Obviously, numbers are numbers, and talk to me about what does that impact make for a buyer? If a point happens, a quarter point goes up, half point, what's really that mean for somebody who's looking to secure a mortgage? What's that impact on a monthly basis for them?
Well, it's a pretty big impact for those people that are watching their payments, and a lot of people are very payment conscious. So, on a $300,000 loan, Leisa, if rates go from 4 to 5%, you're looking at just shy of $200, about $180 on the payment. And that equates to about $40,000, $38,000 to be exact, in buying power.
Ugh.
Yeah.
Yes, that's where the rubber meets the road, right? Because if you have a pre-approval and that pre-approval is maxed out at 350, and somehow the point changes to a point where it supersedes sort of their pre-existing pre-approval, that's where I see a pinch personally. People
Absolutely.
that wanted to basically secure a home that's maybe in that $350,000 price point, or $400,000, it could be any bracket, and then once that interest rate moves, it's disappointing. That your buying power just eclipsed what it previously might have been even the day before.
Absolutely, and with them moving up and down so fast.
Mm-hmm. If you think about trending and predictions for 2019, so the feds are peeling back their number to basically one rate hike from what you've said.
Very dovish, Lisa, from where it was. If you look at it, look at jobless claims, they're as low as they have been. Right now, zero fear of inflation. So,
Translate that, because zero fear of inflation, jobless claims are down.
Right, jobless claims are down. So right now, there is not pressure for the feds to move rates up. The feds want to see an inflation rate of somewhere around 2%. And that's not happening right now. And we look at what's going on with China, the slowdown with China. I mean, that trickles down to the rest of the world with exports. And so all that is affecting what's happening in the United States.
Wow. Things you don't really think about from a global impact perspective. Let's talk about the shutdown. So how have you seen anything that has affected the business from the shutdown?
Really, the only thing it affected was a few USDA loans, because literally, USDA is government, and even though the loans were approved, they could not close. Their period, bottom line. And then it also affected a few clients who weren't working until they went back to work. So,
right.
Yeah.
Devastating effects that you really can't predict for a government shutdown. So that's good news.
Good news, that's bad.
Let's talk about limits, because here in Pinellas County, for example, our limits got raised over the course of the last year. So a lot of people probably don't know that. I think if I think of history in terms of lending, we think about jumbo versus conventional, and probably people don't even really think in those terms. We probably do as agents and lenders, but can you just describe the different types of lending right now and sort of the buckets that they fit into, down payments, limits of those types?
So the conforming loan limit going up to $484,350 recently in our area, Hillsborough, Pasco, Pinellas. $484,350, correct.
Lending.
Mm-hmm.
Wow.
Yeah.
That's a lot of money to be able to put towards a conventional type of loan. And so for everyone thinking through that, so what's the difference between conventional versus a loan limit post that number or higher than that number at 484? What's that mean for a buyer?
So over that to jumbo, it was at $453 and change. But what's really important in that, Lisa, is there's some products like you literally could get into a home with only 3% down, borrowing up to that 484.
Wow.
5% down, 3% down. Wow. So a lot of people don't have a lot of cash right now, and so that I think has helped with buyers being able to buy property, raising the loan limits, because as the appreciation that especially you've seen, both in Pinellas and Tampa, that loan limit has helped a lot of buyers who don't have a lot of cash. Because the answer to your other question was, over that, you're in a jumbo product, which historically means 20% down. Now, there are products where you can put less than that down, but you're going to pay a higher interest rate or premium for them. So that has, again, increased people's buying power.
Yeah, I think that's huge, because if you think about average pricing here for what I would call a move-up buyer, whether it's maybe not their first home, but maybe their second home, you're really in that range. You're usually between that $450 to $550 mark, maybe into $600. And so you think about down payment and 20% of that. If you didn't have a lot of equity coming out of where you were, that could be pretty steep in terms of a jump to be able to put enough down to go in there. So I think that's a huge opportunity for 3% down, 5% down to go in and still be having the ability to get a really nice rate, and then also less out-of-pocket monies. So I think that's pretty great. So let's talk about a different loan type. FHA. Everyone has probably heard of FHA, and they're like, what does that mean? You can talk about what that means specifically, because I think probably, unless you're in the business, you don't know. You think, is that some sort of subsidy program, or People just don't understand that. So maybe you can talk a little bit about that and what the loan limit is on that type of loan.
Absolutely. So FHA is a government-backed loan. The new loan limit just went up to $314,827. And the beauty in that, Leisa, is that someone can buy a home at about a $328,000 loan with 3.5% down. Now, how that differs from conventional, the lending requirements are less strict. So for instance, someone that's had a foreclosure, Leisa, only 3 years ago can get an FHA loan. Whereas with conventional, it's still 7 years in order to get a loan. So people also think that it's only for first-time home buyers. It's not. It can be for anyone. There's no income limitations. It's just the loan amount in limitation. So that's another reason with the short sale, foreclosure, and bankruptcy, all of those requirements are less on an FHA loan. So that hike, again, takes us up to be able to buy higher properties with less money down.
Mm-hmm. Okay, good to know. Yeah, that's decent. Absolutely. That it went over 300,000. What about this scenario? I often have a client, maybe they're in the very initial stages of looking for a house, and I always suggest that they get a pre-approval done, because invariably if they don't do that, they look at the wrong price point and they get attached to a house that they really couldn't afford, or maybe they could afford more. Oftentimes, there's some sort of restriction on it that I find. So I find a lot of value in having a pre-approval done. But talk to us about the impacts of doing a pre-approval, because the number one reason that I find that people do not want to go ahead and take that step forward is because they think it's going to ding their credit. Okay, I'm sure you hear those all the time. So here's your opportunity to take that myth and basically blow it up. So what is the deal? Like when people come to you for a pre-approval, what is actually happening, and what can they expect, and what's sort of your process?
Well, I think most agents that are of your caliber, Leisa, they won't work with a buyer without a pre-approval unless they're a buyer that they've worked with, a move-up buyer in the past, and they know their financial situation, because lending has changed so much, as you know. So the pre-approval process, basically, we're going to check everything. We're going to check the three components of getting a loan: are income, assets, and credit. So, and then we just looked at a 1% spike in interest rate, how that can affect a pre-approval. So you've got to keep them updated. I find that typically, I'll be honest with you, Leisa, lately, just in the past 2 months, I've heard more people say they don't want to get pre-approved because they don't want their credit pulled. So I think it's just all over the internet that it's going to hurt your credit. And it's different when the algorithms for pulling lending for credit for a mortgage are different than if you're going online and you're shopping like for a car and they pull it through 10 different banks. That's going to ding you. But you can actually have 4 credit pulls, and it only counts as 1 when you're getting a mortgage.
Oh, interesting.
Exactly. So again, you're going to protect your seller, right? There's so many people out there that just want to shop and look at homes, and they don't know what their buying power is. Yep,
it's so true. It is. So, I agree with you. If you're thinking about selling a house, for example, making sure that we're pre-qualifying those buyers that are coming through a house is critical. For example, I will not accept a pre-qualification. They must be pre-approved, meaning that what you're exactly saying, they're vetted in terms of their credit, their tax returns, some bank statements, because if I'm going to get a seller into a contract that's binding, I need to make sure that they are protected and that they have the viability for that buyer to actually perform on that contract, which is number one, part and parcel to what you guys do as a lending component to that. So I think that's so true, and I think buyers, take note of that. If you want to be taken seriously and you want to get able to be in a position to win a contract, it's absolutely essential that you do that. And it gives you great advice too, because I know that you've helped clients that maybe needed to clean up a few things, needed to rectify a few items on their credit before they could be able to buy in a few months. So you get great advice from somebody like yourself, and then you also get the knowledge and to know really where you could stand financially to buy.
It's what we do. You sell houses, and it's what I love to do, my team loves to do, and lots of times people will come to us and they, just because they think they can't buy or they have to put 20% down. They think PMI might be the devil, which private mortgage insurance, just in case you don't know what that is. And many times when they realize if you have a great credit score, mortgage insurance is so minimal, you can get rid of it after a couple of years. You may have some debt to pay off. We may free up cash flow just by paying debt off and have a little bit higher mortgage payment, which is tax deductible. So
Good point.
everybody's situation is different.
Yep, absolutely it is. Well, I think that's about all the time that we have for today. I so appreciate you coming in and sharing your wisdom. And if you want to get in touch with Jane, what's the best number for people to reach out to?
The best number, I'll give you two of them. 813-758-8334 is my cell, and the office is 813-961-3900.
Awesome. Well, tune in next time. We'll have another great topic. Thanks so much for tuning in today. We'll see you again the next time. Leisa Erickson, Engel & Volker, St. Pete. If you want to click the links below, you can get a home valuation or you can set up your own custom search. Look forward to connecting with you soon.